I think about the moving averages, what I put on there, how I get the cycle patterns on there, and show you how the versatility really of the TDA platform that I do this on. So what I'm going to do now is I really want to change this now, because when I look at a really long-term chart, I want to look at probably 4 or 5 years when I'm working on this. So I'm going to go to Style here, and I'm going to change this from where it says daily 1 week, change that over to where it says see, it says 1 year, 1 week. I'm going to go to 4 years and 1 week and click on that. And now it's changed it to a 4 year. And now you can see it's got a very, very different look in there, because you can actually, if you have, you can eyeball, you could see that giant head and shoulders that formed in there. So you're starting to get a technical view in here. Now what I'm going to do is I'm going to switch over and change this from a bar type, from a bar to a candlestick. Now on here it offers candle trend or Heikin-Ashi line or area chart. So I'm going to make it a candlestick chart, and that just switched over to it. So on here you could see you've got 4 years back from just at the beginning of '09 all the way through this year. And now what I want to do is I want to start to add in my analysis. So in the past, year and a half, many times I've brought you my monthly analysis in the bond market, and I have showed that there is a very, very strong repeating pattern in the analysis that is about 1 year in length. It's, let's say, an average of about 52 weeks in length. So what I'm going to do now is I'm going to go down here, and I'm going to click on the drawing tools, and I'm going to highlight the cycle brackets in here. And so there's the cycle brackets, and I'm going to click on there. Now what I want to do is I know that, about 1 year apart or 52 weeks, there are these significant lows. I've seen that now for about the last, it's 12 or 14 years that has been consistent. So here's the major low right here, and I'm just going to click right there, and that's going to highlight this tool. And I'm going to open it up, and you will see it really zeroing in on those important lows that are about 52 weeks apart. As a matter of fact, you could see how clear that is. 52 weeks apart right here, and right here, and right here, and right here. Man, those are your yearly cycles, or 10 to 12 month, 10 to 13 month cycles, really. Now, I often show you that there is about a repeating 25-week cycle that keeps going, and actually that divides these 52-week cycles in half. So I'm going to do that. I can see one right over here. You see this important bottom. I'm actually going to highlight that for you to see. You can see that low right here, and this other low right in the middle, which is actually right around here. And then there's one more. Well, that occurred right over here. So those are kind of those middle points. And I'm going to focus in on that, and I'm going to draw in this halfway point, which is about a 25, 24-week cycle. Click on that, and now you can see how it highlights that. Now, there's lots of ways that you can denote these particular bottoms. A very, very popular way with some of the cycle software is when you have a single, it draws a horizontal line like this. Well, that's the point where the low was. When two lows come in or they are nested, they do this, and they put two of them in, and the computer kind of highlights a double bottom in there. I don't use that. It's a lot of work. What I tend to do is I denote that with a drawing tool in here that's the oval. Essentially, this is the big, the oval right here, and that's how I get that line. Now what I'm going to do is I'm going to duplicate that, and I'm going to bring it over here where these two are, and I'm going to duplicate this, and I'm going to bring it over here where this low is. Now, I'm not going to lay it over here because you can't see it. I'll just put it up here. And then, of course, you could see there's another one right over here. So now you see I'm starting to see the buying and selling rhythm in here. And now you can see that these middle cycles, these smaller ones, are also in there. Let's highlight those. This one is about right over here, and I'm just going to change the color on this one. So I'm going to edit properties. I'm going to go in here, and let's kind of make them purple, and we'll do that. And now we'll do another one over here. We'll duplicate that, and we'll put that one over here at the halfway point. We'll duplicate that, and we'll put that one over here at the halfway point. So each of these halfway points, of course, brought rallies. When two cycles were pushing up, well, you got big, strong rallies in here. Here was one right over here. When they're both pushing down, you get big declines. Here, the small one was pushing down, but you had a breakdown here. So that said the big one was pushing down also. That's why you got the big decline. So that's really how I set up these cycle charts in here. Now let's do one more thing. Let's highlight, where H top came. You don't believe in candlesticks? Well, here is a perfect sell signal right here at that top in the candlesticks. Here is a shooting star sell signal at that top in the candlesticks. Here is a kind of a bullish dark cloud cover, a perfect evening star right there at that top. And this one wasn't quite as clear. It's almost a bearish engulfing, not quite. But there you could see all the tops that formed in there. And if you want to even get a little fancier, you can go here. I'll grab my rectangle because that's green. And here is your bottom. There's a bullish engulfing pattern right there. Here is a double star morning star right there. No real good pattern right there on the bottom. And here is a morning star pattern right over here. So there I've shown you how all the candlesticks go in here. So now I want to create some signals in here. And I'm going to go to some tools. So I'm going to right click in here. Let's see if I can get this showing in here. I'm going to I'm going to click on studies, and I'm going to go to edit studies. And that's going to bring up the study window, which I have right here. So now I'm going to, I like to create multiple moving averages. So I just want to show you MOV, moving average ribbon, and how that works. So I'm going to put in a moving average exponential ribbon. And I'm frozen here, so hopefully this will, there we go, apply, okay. There's a ribbon in there, and look at, that's really busy, and I can't get a lot of information out that, but I like the information you get on those things. So I'm going to delete this off of here, and I'm going to create my own ribbon in here. So what I'm going to do now is I'm going to go back to studies, and I'm going to go edit studies, and I'm going to bring up a moving average 2 line. And I'm going to go here, moving average 2 line, and I'm going to click on that, and I'm going to make this into 8 and 13. Interesting that you'll know those are 2 Fibonacci numbers, 8 and 13, and I'm going to apply that. So now you could see I've got those 2 in there. Now what I want to do is I'm going to edit those, and I'm going to actually make those exponential moving averages. I'll make them a little thicker. Here we'll go to exponential, and on the slow average, and we'll make that one a little thicker also, and I'm going to say apply, okay. So now you can see in here we have the exponential moving averages, and now you start to see signals start to form in here as they cross over. Here you had a crossover here, and here you barely had a little crossover, bullish crossover here, bullish crossover here, bearish crossover here. Really nice little signals in here. But I'm going to create my own ribbon, and I'm going to create a signal line. So I'm going to go into studies again, and I'm going to go edit studies, and I'm going to add in a exponential moving average. Here is moving average exponential, and I'm going to make this one 21, which is the next one of the Fibonacci numbers. And there it is down there, and I am going to run a little late in here. We're going to we're going to edit that, and I'm going to make this one actually a lot thicker so that we can see that. Change the color here to blue, and apply, and now we have that. Now you can see you got a nice signal line in there. The first warning is when you have the crossover. The next warning is when it crosses over that big signal line. There is a confirmation there. Here's your confirmation on the upside. And you can see how nice it works when they line up in one direction, and here we have them lined up in one direction. So there you have me creating all of those alignments. Now, I've talked about this long pattern, and you can see on the right, you really can't see where these things are going to converge on the downside. So on the bottom here, I'm going to click on right expansion. I'm going to change right expansion settings, and I'm going to go from where it is now at 5 to about 30 and move that over and apply it. And now I'll click OK. And now you could see that's all moved over to the left, and you can actually see where there likely is a target for the next major low. And I have been talking about sometime early next year as when this correction is going to end on the downside. Of course, we're in this little rally period right here, and that's what I've expected. And while I've been talking about, something like 6 to 9 weeks on the upside in this period, likely that's going to happen. And when it rolls over, you're going to be still in this downtrend here. Well, all of this time in here. That's how I get my long term projection. This looks like around February as the time for this low in here. So, what have I given you? I've given you the candlestick patterns. I've given you how to set up the long term chart. I've given you how to create your own ribbon. I've used the 8. 13 and 21 moving average in here. I've showed you how to use the get the cycle set up done in here, looking at both the long cycle and the shorter cycle, the 25-week. We look at all of the time, the 1 year that shows up on the monthly chart, and got to the point where, well, I can project this low being way out over here early part of next year. So just for the fun of it, let's take a look and see where we are in the S&P 500 here. And there it is. I don't have the cycle analysis up here, but I've got these ribbons in here, and you can see actually, and I'm going to zoom in a little closer in here, that you could see that the correction that occurred back in 2011, you actually got a sell signal right here. You got the buy signal right here. You got nothing right here as they didn't align whatsoever on these corrections. And the stock market remains configured bullishly on the upside with no crossovers whatsoever all through this year, 2013. So this is similar to the analysis I did in Trader Planet. It's a little different, and I used monthly charts. And you can see a beautiful positive alignment in here. And and that doesn't mean we can't get corrections. And we've had, 6-8% corrections in here, and always testing this 21 bar moving average at this point. And so we could get corrections, but until you get these crossovers, it's not likely that you will see a significant move on the downside. Here, if you go way back to 2011, you got some significant moves on the crossovers, and in 2010 also. So I just went back there. So that was a demonstration on how combination of tools that I think is very valuable. Make sure you write me. Let me know how you like that, and if you apply it to some of your own charts, tell me how they worked. That's it. We're going to take